Hello, Rising Tide clients, and welcome to your market update for the December quarter of 2023. Like last quarter, I'm going to walk us through the performance of the Vanguard High Growth Index Fund, which many of you are invested in via one of our platform offerings, and also serves as a very good proxy for the global share market, given 90% of it is invested in Australian and international shares. So, how did we go last quarter? Happy to report that we had a good quarter, up 4.5% for the December quarter, which was a nice bounce back from the negative September quarter, and brings the year-to-date and one-year returns, to 16% or just shy of 16%, which is an excellent return for the stock market by anyone's measure, and almost double what we expect to see over the long term, which is 8%. And where does that 8% come from again? That is its history for this fund over the last 10 years and since inception, which is 2002, where we've seen just north of 8% returns. Now, we commonly at Rising Tide talk about the confidence in the longer term of these investments and a great uncertainty or lack of confidence over the shorter term. And that's why I wanted to share this slide here with you, which shows the probability of positive returns in the share market over different time frames. Over one day, 53.4% is the chance of a positive return. Let's call it a flip of a coin. Over 1 month, 63%. 3 months, 69.5%. And as you can see, as we march over to the right, we get higher and higher. So over 5 years, the chance of a positive return is 92.6%. And over 10 years, the chance of a positive return is 97.3% in the share market. So that's why we like to play. That's where the edge is. It's playing the longer term game when they align with your goals. That's where there's confidence of generating these types of return in the share market. Now, 2023 was a volatile year. And what worked in 2023 is what we think will work again in 2024 and onwards. And that's one really of staying the course, quite simply. So what worked last year was buying when markets were strong and headlines were positive, and also buying when markets were weak and headlines were negative. That consistent month-over-month investing is what delivered returns for our clients in 2023, and what we think will deliver returns for our clients again in 2024 and onwards. Now, what drove the rally in the share market towards the end of the December quarter? It was one really of a global narrative around a soft economic landing, and this is for all major economies, for the US, for Europe, and Australia. The market is predicting no longer predicting a severe recession or a recession. We're expecting the economic landing to be very soft as inflation moderates, the economy continues to grow, and employment remains close to full. And what that means is that interest rate cuts are now being priced in as inflation comes down. So in Europe, in the US, and in Australia, the market is predicting interest rates will come down, which is good for asset prices and for those that have a mortgage, and has led to that drive and that excitement in the market towards the end of the year. Now, 2024, what do we expect? Of course, we're not going to make predictions. No one has that crystal ball. But what I think will form part of the narrative is elections. Next year, there are 70 elections globally covering 4.2 billion people, which is roughly half of the world's population. What happens during those elections, what the share market does, remains to be seen, but I believe it'll be part of the narrative going forward. The two to look out for are the Taiwan election early in the year and also the US election, which comes around in November. Now, as we did last quarter, I think it's again important to connect with the top holdings of the Vanguard High Growth Fund. And those are the names on the screen. So all the large Australian and US companies. One of the big drivers of the US share market was these tech companies last quarter. They were all very, very strong. You can see Apple, Microsoft, Google, Amazon, and Nvidia had very good years in 2024, and we're all part of 2023. Sorry, we're all part of your top holdings, and that's what helped drive your returns. These are all powerful brands with high moats, with pricing power that we have confidence in and expect to be around over the next 10 years. And that is it. That is the market update for the December quarter. As always, please reach out to myself or any of the other advisors at Rising Tide with any questions at all about this presentation and how it relates to your own financial strategy. We'd love to hear from you as always. So thank you very much for your time, and we'll speak next quarter. Bye.